and welcome to this edition of Closing Trades. Right here in 80 now, holding around that 25,000 print. We've been flickering in and out of that mark, but at least on the futures, we've managed to stick by with that mark for the better part of today's trading session. The breadth of the market is also looking nice. You've got a good count of 151 standing to the advances. So that little bit of a flip-flop that you had last week, at least this week has started off on a good note. As have monsoons, much before arrival. The first time since 2009, the monsoon onset has been that early, not just in the south of the country, but also in the western parts of Maharashtra or the country as well, largely. And yes, it's officially raining monsoon now in Mumbai as well. So what's holding out? It's some of those actually monsoon-sensitive stocks. Look at the entire two-wheeler and the farm equipment space. That's the one which is seeing a flurry of trade. Bajaj Auto has been your top mover from the word go today, as has been the case for the M&M. A solid 2.25% move is what you're seeing there. Tata Motors also holding out well. You've got a Nestle which is also looking good. ITC, Hero MotoCorp. These are the spaces which are actually holding out. From within the broader end of the market, it's Hudco. Had a few good days last week too, and today as well is sitting on a good 5% kind of gain. 240 is what that stock is already nudging. You've got a Divi's, of course. After that tie-up with a global firm or new order win rather, that stock as well has been holding out very steady. A good over a 3.5% move is what it's sitting on. Paytm holding high by 3.5%. We've got Solar Industries higher by 3.5%. And Godrej Properties as well, pretty much sitting at the high point of the day. That stock too around those 2250 odd levels in trade right now. A solid 3.25% of an uptick is what you're seeing on that stock. But globally as well, things are pretty buoyant. Europe has started off, extremely cheery after Trump delayed that 50% tariff on EU. You can see the stock 600 hold up 1%, 1.6%, almost a 370 odd point move coming in for the DAX as well. CAC higher by 1.25%, and FTSE MIB as well scaling higher by a good 1.5% as we speak right now. So good going for the global markets too. But Narendra Solanki joins in on the show right now to talk about his thoughts on the market. Narendra, hi, afternoon. Good to have you on the show. Guess all things are pointing towards a buoyant market move. It's been a decent earnings season and now the early onset of monsoon as well.
Yeah, good afternoon. Yeah, definitely. I think earnings season is almost over, and few macro data points have also turned out to be optimistic, especially the monsoons, the inflation environment, and the rate cuts environment. So all these three, along with the announcements in the budget, would definitely cheer up the festival season, and the demand is likely to pick up in these segments for next 2 to 3 months. So definitely the market has given a thumbs up to all that, and overall mood is also optimistic for the market, especially on the revival of both rural and urban demand. All the sectors tracking into these segments have been trading very optimistically right now.
Okay. So Narendra, what's been the analysis of the earnings season so far? What's managed to stand out? Where is it that you're overweight and where is it that you're underweight?
I think earnings season was largely on expected lines, and I think the market currently is still a stock-specific market. And coming to the sector basis, we are positive on banks and financials, especially in banks. We favor public sector banks in comparison with private sector banks as a basket. Apart from financials, we are positive on FMCG, durables, as well as consumer or discretionary segments. And defense also we are very positive. However, some stocks may appear to be highly richly valued, but looking at the kind of orders which are expected to come in, I think the valuations will also somewhat decline for those kind of stocks. So defense is also looking very good for medium to long term perspective. And overall, the domestic manufacturing space, especially electronic manufacturing space, which have corrected, which we have seen has corrected somewhat, is also looking attractive. So overall, the domestic economic environment and domestic inward manufacturing companies are looking very good. In pharma, we are more positive in hospital segment rather than the pharmaceutical companies or drug companies. So that is our outlook on pharma. And in auto, we are more positive on two-wheelers, agri space, the likes of M&M, TVS Motors, Hero MotoCorp, kind of companies than the passenger vehicle segment. So these are our sectoral bets.
All right, so those are the sectors that one can look out for. Hi, Narendra. Good morning. Good afternoon. I beg your pardon. This is Shrishti also joining in. But since you just touched upon autos, give us some more sense that what is your pecking order in terms of preferences, especially in the two-wheeler pack? Because of late, from the earnings, there was no major disappointment. And with a good monsoon, that brings the cheer back for the rural demand to pick up as well. But given the fall for especially Hero MotoCorp, Bajaj Auto, which have already corrected like 50% from their highs, which one is your most preferred bet? Would you like to go with an outperformer TVS, or rather look out for some underperforming names like Bajaj, Eicher, or for a matter Hero MotoCorp?
I think TVS would continue to remain our one of the preferred picks. Apart from this, Hero MotoCorp is the second pick which we would like to go for.
All right, so TVS as well as Hero MotoCorp, let's watch out for that. But within the IT pack, Narendra, give us some sense that how are you looking at the sector overall? Because just post the earnings, there was a momentum in these counters highlighting that the valuation is giving a bit of a comfort. But post that, all these stocks have been really range bound. Anything exciting that you're looking at for the IT space?
Broadly, we are optimistic on IT, but we are cautiously optimistic and looking and having a stock-specific view. So right now, rather than going with pure service play, we are going on with engineering R&D companies like KPIT kind of companies. We are more positive, more favorable on. So these are the plays in which we do look forward in the IT space.
Okay, that's the take coming in right now as far as, IT as well as autos is considered. But let's just take stock of some of the other movers as well in trade and show you where is it that you're seeing those meaningful moves right now in the markets, because what you're seeing is a fair amount of buoyancy when it comes to the broader end of the market as well. That's where you're seeing some big moves coming in. Look at, for instance, what a Hoodco is up to. Like we told you, sporadically you're seeing some of those realty plays as well look very smart. So the likes of Godrej Properties is what's scaling higher in today's trading session. That of course is looking very good. And then of course, you've got names like a Divi's, which are also holding out just very, very smartly. That stock holding higher as we speak right now. There's JSW Steel, of course. The Supreme Court has ordered a status quo on the NCLT proceedings on the BPSL liquidation. So that stock as well has been active. 2.25% higher is where the stock is right now. And then there is Eternal, because of the MSCI as well as FTSE weight reduction. The stock could see outflows of about almost $840 million. And right now, we should just bring up Eternal for you on your screens and show you how the stock is currently panning out, because this has been, stuck in a range, if you will, for some time now. And today it's seeing a 4.5% of a downtick coming in, 225 thereabouts, or 226 is where the stock is. Narendra, do you believe that any further correction in names like Eternal or erstwhile Zomato could be good buying opportunities, because these are long-term structural stories? Or do you think a Swiggy, which is the peer, would make more meaning because there is definitely that valuation comfort there?
I think definitely it's a buying opportunity emerging, especially with these kind of leisure creation and some fund related infused action happens in the market. Also, if you see the overall results are good, the strong execution we saw in Blinkit was also very impressive, and definitely it's a long-term growth story. So I think it's definitely a buying opportunity at the lower levels for investment.
All right, so that's the take coming in on Eternal. But with this, let me also welcome on board Ruchit Jain, who is joining us on the show right now. Hi, good afternoon, Ruchit, and thank you so much for your time. First up, help us with your take on the markets, because after those initial hours of volatility, we are quite range bound for Nifty as well as Bank Nifty. But where do you see the index headed? What kind of a data is shaping up, suggesting moves for the last half an hour and beyond?
Yeah, hi, very good afternoon. Well, if you look at the broader trend for the markets have been positive with high top, high bottom structure continuing on the Nifty. And importantly, recently, the dips that we have got in the month of May. Initially, in the first week of May, we got a pullback move from 24,600 to about 24,100. And again, during last week, we saw a similar pullback move of 5 to 6 trading sessions where the markets corrected from 25,100 to 24,500. Now we can see that this both these corrections which were there in the month of May lasted for about 4 to 5 sessions, and the 20-day exponential moving average support was not breached, which acted as a support. So I think till this is intact, we would continue a gradual up move in the market towards 25,250. So it remains a buy on dip market, and any kind of dips that we get in between should be used as a buying opportunity, and we expect 25,250 to be tested in this week itself.
Right. Okay, stay with us. Lots more to discuss when it comes to the markets, but let's just focus to an important story for now. And it seems that with the onset of early monsoon across states now, the power demand has taken a sharp shift, recording a dip of nearly 11% already over the last 10 days. Let me take it across to my colleague Prakash and get in more details here.
Yes, there's a decline in power demand due to change weather conditions thanks to heavy rains and thunderstorms in various areas. As per the Power Ministry's data, peak hour power demand has been reduced by approx 11% in the last 10 days. Peak hour demand has been decreased to 198 gigawatt on May 25 from 221 gigawatt on May 15. Along with that, the government has met roughly 200 gigawatt power demand during the day on May 25 as compared to 230 gigawatt on May 15. Along with that, UP registered the highest power demand at 27,400 megawatt, followed by Maharashtra at 22,495 megawatt. Along with that, there is no power shortage across the country during peak hours. A significant growth in power generation from various sources such as thermal, solar and wind energy. However, as per the Power Ministry's statement, peak hour power demand likely to cross 270 gigawatt during ongoing summer season. The government has already prepared an emergency plan to meet any surge in power demand during June and July.
All right, thank you so much, Prakash, for giving us all those details. So a 10% fall in the power demand in the last 10 days is what we have witnessed. But Ruchit, just wanted to have your take on the power stocks that are maybe reacting to this news, because I can see that stocks like Tata Power, Adani Power, they are at the days near the day's lowest point. Do you believe that these stocks can witness a bit more correction even from these levels? What are the charts telling you?
So on the charts, it is indicating that we would see more of a time-wise correction rather than any significant price-wise correction in the stocks. Tata Power has already seen a good price-wise corrective phase along with the broader market since the month of October to mid-February. But since then, it has seen some consolidation, and that consolidation could still continue going ahead. So yes, because of these news flows, we may not see a run-up move in the stock, but at least not expecting any significant price-wise down move as well. So at the most, no, I think no, we would see some time correction in the stocks in the near term.
Right. Okay. That's the take coming in on some of these power plays right now. So, that's exactly what we're picking up when it comes to the power space. But, I just wanted to get your sense as well, Narendra, on the entire power sector right now, because one is seen as to how a Tata Power to a Power Grid to financiers like PFC, REC have shaped up all through past year and, so far this year in the market correction that also played out. But where is it that you think there is value to buy afresh?
I think this is transitional in nature. Whenever monsoon hits, there is some moderation in the peak demand. But I think overall the sector is poised to grow. There is huge opportunity for power sector to grow. And I think for next 5 to 10 years, we are poised to grow at about 5.5 to 6.5 percentage CAGR for power generation. So this is a very good growth. And hence, I think the long term still remains intact for the overall sector, and there's no doubt about it. And in the current scenario, I think we like JSW Energy very much right now. and of course the power grid and distribution, and a few of the transformer companies like Transformer and Rectifiers India Limited. So these are the plays within the power sector.
All right, so that's the take coming in on the power space, both technical as well as fundamental aspect as of now. But with this, let me also welcome Aditya Agrawala, who's joining us on the show right now. Hi, Aditya. Firstly, help us with your take on Nifty Bank rather, because that index is more volatile in today's trading session in comparison to Nifty 50. At one point in time, we did see the index drifting in the red as well. So Aditya, which are the levels that you're watching out for Nifty Bank, and what sort of a move are you anticipating?
Hi, Srishti. Good afternoon. Thanks for having the show. It's more of a consolidation, I would say, both on the Nifty and the Bank Nifty, between 56,000 on the upside to about 54,500 on the downside. While Bank Nifty does shows more promise as far as outperformance is concerned. But again, I'm keeping a close eye on the VIX. That is something which is still not at a comfortable position, which is not letting market go one-way rally on the upside, which is why we are witnessing that kind of a volatility as well. So till the time the volatility index actually slides below the level of 16, my sense is we are going to see this kind of volatility continue in the equity markets, at least on the Nifty and the Bank Nifty both. But I don't see too much of a correction as well. So both the indices, I think, will remain locked in a range. If you're looking to go long on Bank Nifty, maybe look to go long closer to about 55,000 with a support at 54,500. And on the upside, you can see levels of 56,000. On the flip side, I think around 56,000, you will see profit taking again, and markets can slide gradually down to 54,500. So till the time VIX actually slides below the level of 16, I think, Srishti, this range is going to continue, and markets will remain choppy and volatile within this range of 56,000 to about 54,500. For the Nifty, as far as is concerned, 25,100 to about 24,400 on the downside is the broader range in which I think Nifty will also continue to oscillate.
Just two stocks that I want to bring up for you on your screens. A, of course, Divi's has been quite the stupendous mover from the word go. They've announced another agreement with a global pharma company to supply advanced intermediaries. There's a capex investment of 6.5 to 7.5 billion rupees funded via phased advances from the customer itself. And remember, this is their second order win that they've seen so far this year. So the street is quite excited about that. On the flip side, there's Balkrishna Industries. While their results are, below estimates, what they've announced that's making the street a little cagey is the diversification. Into the passenger car radial segment and the truck and bus radial segment as well. Even though the management noted that there are product-related synergies with the existing business, the street seems a little cautious about this extension. Narendra, how are you viewing these two pieces of news when it comes to both Balkrishna as well as Divi's?
Yeah, for Divi's, I think it's positive, and definitely the results are also largely in line. And coming to the order win, I think we look positively forward for the company, and it would also add to it. However, coming to the PKT, I think the new announcement which they have made is actually very low in margins front, and we believe that it would be dilutive of their operating margin as well as profit margin. Hence, we might see some multiples coming off of it, which we might have also seen in the price reaction today. And going ahead, also, I think it would have some impact in deterioration of some profitability margins because of this. So definitely some premium multiple from out of maybe a kind of offer around 3 to 4x kind of things going ahead for the equity.
All right, but Narendra, since we are just talking about the tire space, give us some sense that what is your pecking order in this space? Because the reason I'm asking is because a lot of these experts do believe that the bottom for the margins are in place. Well, Balakrishna is in focus on the back of a separate news. But given the fall in the rubber prices and the anticipation ahead, the crude oil has cooled off. We have seen stocks like JK, CEAT, Apollo Tyres reacting to this particular news flow. So give us some sense that which are your top bets within the tire space and your favorites.
I think CEAT and Apollo are two preferred, and after that MRF is the second best for us.
All right, Fiat and Apollo, those are the top favorites when it comes to the tyre space. But with this viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
Back with closing trades right here in ET now. We're holding on well to the gains right now in trade. Of course, dominantly it's autos, which is actually the leading pack in today's trading session. Everything from a Bajaj Auto to an M&M. Largely, those monsoon-sensitive stories are the ones which are taking the lead, or for that matter, even Hero MotoCorp. Also seeing some strength come in for the metals universe, at JSW, Hindalco. These are also names which are looking good. Nestle, ITC as well, holding out well. So it's a good buoyancy that you're seeing in the market. The big drag, of course, continues to be Eternal. That stock is lower by almost 5% on the futures as we speak. In fact, I'm going to bring on board Varun as well and help us understand what these inflows are going to really mean. And, given that there is an estimated outflow because of its because of its weight reduction in both the MSCI as well as the FTSE, it's going to lead to outflows of about almost $840 million. And that's why you're seeing the stock as well weighing a little bit heavy because of that. But Aditya, help us on the charts of Eternal. Do you see it go close to 200 at all, or do you think it forms a base around the 220 mark, which has been quite the support for the stock?
Well, the trend is not that strong as we speak. The pullback was countered. It did face somewhere resistance around the 200 DMA. Bears did batter the stock around 250 odd levels, and 220 for now is a strong support area. But my doubt is how long this support area of 220 will hold. My sense is a matter of time before that 220 breaks, and you will see sub 200 levels on Eternal. A weak looking chart setup. If you already have the stock, maybe my suggestion will be to place a stop loss somewhere around 220 and continue to hold. If you're looking for a fresh entry in the stock, maybe wait it out for some more time.
All right, so that's the day coming in on Eternal, but let's get in more details on this particular counter. What actually moving the stock is the FTSE as well as MSCI. Both are expected to reduce the weightage on this particular counter. Let's go across to Varun for more details on this one.
Well, definitely, Eternal is down by around more than 4% today, and this is after falling 3% in the last week. Now, why is this fall? Because the stock is expected to see a sell-off of around outflows of around $840 million, and that is going to happen this week itself. And this is because FTSE and MSCI are reducing weight in the stock. This has happened because the company has actually got shareholders' approval to reduce the overall foreign ownership limit of the company from 100% to 49%, and this approval the company got last week. And after that, you have seen a sell-off in the stock, and now the sell-off is continuing because the outflows are going to happen. Now, why this is happening? Because if you look, there is a FL note which says that unlike headroom related reductions which are actually implemented in a phased manner, a direct foreign ownership limit cut may actually lead to a full investability weight reduction in a single step during the interim event. And because of this, there is this adjustment which is going to happen, the weight overall adjustment. On 27th of May, it is expected that around $380 million of selling is going to happen in the stock, and on 30th of May, around $460 million of outflow is expected in the stock. So the total comes to around $840 million of outflow that is going to happen in the stock because of the reduction in the foreign ownership. If you see from the 52-week high, the stock is already down more than 22%, and because of this sell-off, more pressure is expected on the stock, and that's the reason you're seeing after the sell-off of more than 3% last week, we are seeing a follow-up selling in the stock of around more than 4% in today's trade.
Right, okay, that's what explains the weakness in Eternal. Varun, thanks for that. Let's also get you the latest on JSW Steel. And the Apex Court has halted the liquidation of Bhushan Power and Steel, or BPSL. We caught up, in fact, with Sandeep Parekh as well, managing partner at FinSec Law Advisors on the matter. Let's hear out what he had to say and what the management as well told us.
I think it's a very good measure from the Supreme Court because I think the order itself was quite not just bad for JSW and the companies involved, but also quite disastrous for the entire insolvency process. and therefore I'm glad that at least they've stayed their own order for the time being, which itself is a good step, because usually when review petitions are filed, most people don't get relief. So I think it's a great step. I'm not saying that they're going to win at the end of it, but at least stay ensures that they don't need to unscramble the egg later.
The matter is sub judice and it's in the Supreme Court. So I will be able to give you whatever information I can. So one thing is that on the implementation of the plan, we have implemented the resolution plan as per the law and fully in compliance with the plan. That's number one. Number two is that we have revived the asset to where the asset is seen today with respect to volume and operational performance both. We have analyzed the matter with our legal advisors, and we believe we have strong grounds for looking at all the legal remedies, and we would be taking steps towards that. There is a process which you need to follow as per the agreement in the resolution plan, which had specified number of days. So it's a communication which needs to be followed. Basically, we have given that communication, also seeking more time to complete the entire process, and the legal remedies which we're talking about.
About JSW Steel, well, of course, Supreme Court has halted the liquidation of Bhushan Power and Steel pending the JSW review petition, and we also heard from the management. But Narendra, help us with your take on the whole news flow, because of late when this news kicked in, we have seen a lot of correction in stock of JSW Steel, but with today's action and today's verdict, give us some sense that what could be the next steps for the company, as well as what could be in store for the investors as well.
I think definitely the court case have added an uncertainty to the stock in the near term, and this is just a stay. So it's still we have to see how things pan out here. If you talk about the capacity, so this plant has almost around 12% kind of a share in terms of installed capacity, and was adding around 8 to 9% in terms of profitability. So if this comes out, then I think that kind of an impact JSW may have to take on. So almost about 9% kind of profitability impact would be there for the company. So things are still not clear, but definitely uncertainty for the stock, and I think we should see how things pan out, and then probably take a call.
Thanks so much for your time today. And glad that you could, join us today on the show. We'll take a very quick break. When we come back, we'll continue tracking markets with our chartists on board.
Welcome back to Closing Trades right here on ET Now. As of now, the market's holding steady, and even in the Nifty Bank as well, we are seeing some minor gains, holding almost 180 points of gain as we speak right now. But apart from what's really been happening in the equity markets, it's the weather that is taking and making into the headlines, because Mumbai has welcomed the monsoons with heavy downpour, which has actually caused waterlogging in several parts of the city as well. But remember that the rains have arrived early by at least 8 to 10 days than its normal schedule. We spoke with AVM GP Sharma, who is the president of SkyMet, and he shares that the rain will likely to continue for the next 3 days. Let's go across and listen in to what more he had to say.
It is different monsoon in that respect, and possibly we will see this activity going on for the next about 3 days or so, simultaneously on this Western Ghats side, West Coast also, and over Northeast India also. Another system comes up in the Bay of Bengal, which takes it further. That system will be coming up around 27th of May or so, 26th night, 27th of May, which will revive the activity over the eastern parts of the country, be it the coastal parts of Odisha, northeast India. So that will be a fresh surge, which will, so far, it was the Western Arabian Sea current which was advancing.
Okay, that's the monsoon update from the Met Department. But the flight operations at the Delhi airport were also immensely affected because of the heavy rainfall in the early hours on Sunday and later during the day as well. The flight operations remained impacted. My colleague Samir Dikshit is here with the latest update.
The flight operations were immensely impacted at Delhi airport due to the heavy rainfall, and not just Delhi airport. On Monday as well, there was a yellow alert warning issued by the weather department, because of which Mumbai airport operator also issued advisory to the passengers that they need to check the flight details so as to avoid any major inconvenience. Now, when it comes to Delhi airport, there was a sudden and heavy rainfall in the early hours of Sunday, which impacted more than 3 dozen of flights. The official statement by Delhi airport mentions that in the early hours of Sunday, there were 49 flights which were diverted, though there was another flight tracking agency which reports that the numbers were much higher, as it was reported by the Delhi airport officially, but the numbers were a bit higher, and also it included some cancellations as well. Coming to Mumbai airport, so on Monday there was a Air India flight which was diverted in the early hour of Monday, though these numbers might increase with the passage of time when the total data will be shared by Mumbai airport operator. But because of the sudden change in weather, because of the heavy rainfall, whether it be Delhi or Mumbai, the flight operations has been immensely impacted, and because of which we have seen that whether it be airline or the airport operator, they both are sending advisory to the passengers that they need to track the flight details so as to avoid any inconvenience.
All right, thank you so much, Samir, for getting us the latest on this particular front. But let me also welcome on board Mayuresh Joshi, who is joining us on the show right now. Hi, Mayuresh, help us understand that which theme are you picking up in the markets right now? Because of late, we are witnessing a lot of sector churning. And today, of course, seems like it's a day of autos. But give us your sense on the markets as well as the sectors that you like.
Afternoon, Shrishti. I think it's a combination of a lot of factors why the markets are moving the way they are. Obviously, I think the news where India has become the fourth largest economy in the globe, the markets have taken that very, very positively. Monsoons have come early, and I think that's a good cheer for the markets, because rural-based consumption and urban consumption, which has been lagging, along with expectations of better monsoons, pulling down food inflation. And therefore, I think the more stickier part of the food basket, which includes cereals and pulses, to a large extent expected to come down as well, might pave the path for a rate cut cycle as we head into the next few quarters. And therefore, I think the banking system or BFSI as a space and a lot of allied sectors with expectations of these measures which can take place are taking it very, very positively. And third, I think the expectation largely getting built in terms of earnings actually bottoming out in the next quarter or two, and actually showing a huge recovery, because the second half has always been pegged over so many years as an earnings defining recovery half. But this time around, it might be a little different, with consumption picking up, expectations of government capex continuing strongly, RBI providing liquidity, and the private capex expected to come back, giving the impetus both from a macro and a micro perspective, or probably helping or abetting India to stand out compared to global economies. Having said that, I think a couple of themes that we are probably looking at markets with India in terms of ratings, rankings, institutional holdings. Alco beverages as a space is something that we believe can continue doing well. Numbers have been very, very encouraging in Q4. The expectations in terms of premiumization expected to continue for this space. Some hikes specifically for some states also expected to come through. And input costs have remained benign and are expected to remain so, whether it's ENA, whether it's molasses, or whether it's glass prices, helping EBITDA margin expansion and operating leverage. So Radico is something that we continue holding in our domestic as well as global portfolio. So this is one space that we will probably watch out for, because monsoons have come in early. And one theme that we were playing out over the last few quarters, since the last couple of quarters, agrochemical stroke fertilizers as a space might actually continue doing well, because with the onset of monsoons, which are probably early this time round, Kharif sowing might actually accelerate. And therefore, I think the volume growth for a whole host of agrochemical stroke fertilizer companies might actually start picking up quite significantly. So farm gate prices should be relatively stronger. At the same time, I think input costs, like in the case of alco beverages, whether it's phosphoric acid, whether it's ammonia, whether it's potash, and a large part of those operations being integrated backwardly by a lot of these companies because of backward integration, the positive impact on margins can be relatively better. And therefore, earnings from a return ratio perspective, from a balance sheet perspective, I think these companies look appropriately placed as well. So Sumitomo Chemicals, as an example, is again one pick that we probably got on the mid cap space, which might continue doing well. And third, I think with all the construct that we probably got, BFSI as a space might actually continue doing well. And therefore, select leadership stocks, including the likes of ICICI Bank from the larger names, Karur Vysya Bank from the mid cap names on the private side, Bank of Baroda from the public side, as well as a few of the housing finance companies to the likes of PNB Housing, Canfin Homes, can actually do well going forward as well. So I think a few of these domestic research sectors, in our opinion, is where the top line growth, the margin expansion and bottom line growth can actually be compounding at a decent pace over the next few quarters.
Okay, interesting. That's what's looking like a good opportunity in the market right now. But Mayuresh, what's the monsoon-related trade right now? One can see a fair amount of buoyancy in some of the niche FMCG as well as the two-wheeler plays, along with, of course, farm equipment majors like M&M. Do you think that's a good space?
After the match, oh, absolutely. And again, I think, as I said, it just does not give impetus in terms of how the Kharif season will play out. But if monsoons are good, which everybody believes, I think the next Rabi season might be equally good as well. So one of the sub-themes when it comes to rural spending, it actually is agrochemicals, fertilizers, as I said. But if you probably go to the bottom of the pyramid, if things improve, I think selective FMCG plays might also start coming through quite effectively in terms of how consumption patterns will play out. And therefore, when FMCG companies depend a lot in terms of rural volumes, rural volume uptick, specifically since Q2 or post Q2, and specifically the second half of this fiscal, might actually improve quite significantly. And therefore, I think FMCG selectively as a space, stocks like Marico, Britannia as an example, Jyoti Labs as an example, can be kept on your watch list. Obviously, I think the lower rung items, when you're talking about retail players or apparel makers whose pricing is below 500 or 1,000 odd rupees, catering to tier 2, tier 3, tier 4 towns. So names like a V-Mart Retail, names like a Vishal Mega Mart, but actually show compounded annual growth rates, which are far higher through the sluggishness that they've probably got in the last few quarters. Even footwear players, to a certain extent, might actually start showing that resilience that one probably expects to come through. And therefore, I think an indirect way of probably playing this might be these players. The obvious choices when it comes to rural will be agrochemicals, will be tractor makers, will be two-wheelers. But I think a bit of these sub-segments that I just spoke about might actually improve drastically in terms of their earnings outlook once discretionary spending starts coming back.
All right, so let's watch out for some of those names. But other than that, within the broader market space, what's really doing well is a stock like BEML. And Aditya, if you can help us with the chart check on this counter, because the management commentary was indeed on the positive side. There has been a double-digit growth in the EBITDA as well as the bottom line and the profit figure as well. And the analysts are expecting the margins to expand in the times ahead on the back of better execution in their metro as well as Vande Bharat projects. But Aditya, after a 16 to 17% jump, do you believe there's more upside, or the stock should wait out and try to take a breather at these levels?
Srishti, I think there is some more upside for sure. Somewhere between 54.50, 54.60 is where I think stock can test levels. Apart from that, after that, I think stock will enter into some kind of a consolidation zone because it has to digest this kind of a big up move that we're witnessing in the stock today. The heartening factor is we are witnessing excellent volumes in trade today. I think I'm not seeing this kind of volume in the stock for the longest period of time. So this kind of volume suggests that yes, there is massive buying in the stock, and this kind of volume usually leads to a sustained rally, if anything else. But yes, after 54.50, 54.60, stock can actually enter into a consolidation phase, which will be a good time to enter into the stock if it witnesses some kind of a profit taking or consolidation. If you already hold it, have the stock in your portfolio, continue to hold for a target of 55, 50, 55, 60, sorry, 45, 50, 45, 60. If you're looking for a fresh entry, maybe wait it out for some time before you look for fresh entry in the stock.
Rajat, where is your sense on where one can trade either the defense names, which have already had fair amount of run up, or for that matter, railways, which are now beginning to catch up?
So I think as within the defense space, we believe that this is an uptrend which could last for a few more months going ahead. Certain stocks have already run up, but within those names itself, we like BDL, BEL, where the price volume action have been quite strong. Even BEML today, we have seen a breakout from its previous swing highs with very high volumes. So I think defense as a space would continue to show a good relative outperformance. So any kind of dips should be now used as a buying opportunity. So this remains a buy and dip space for us. Apart from that, railways, I think just from a trading perspective, we could see another leg of up move, whereas recently we saw an up move supported by good volumes. Some consolidation has been there since last 3 or 4 trading sessions. But we have not seen any kind of volume-based selling happening in the stock compared to the volumes, which were good when the stocks ran up. I think a couple of names such as Railtel is there or Titagar Wagon, looks quite robust on charts. So I think one is looking from a delivery-based perspective from the railway space, then Railtel or Titagar Wagons could be a couple of names where one can initiate fresh positions from a positional perspective.
So let's watch out for those select names within the railway pack. But just a few minutes left for the markets to shut shop, and let's also get you some of the trading ideas from our experts, and let's find out their BTST or STBT trades rather. And Aditya, you go first. Tell us which is the stock that you're eyeing right now.
So I've got a couple of buy recommendations. Shrishti, the first one is a stock from the IT space, large cap Infosys. I think after a decent bit of a correction, stock is now getting up for a big up move. And IT as a space, I think, is looking up and away. And in the next few trading sessions, you might see an up move in the IT space. So Infosys is a buy for me for a target of 1650 on the upside with a stop loss at 1540 on the downside. The second stock is Crompton. Again, this is one stock which has bucked the trend of late and has witnessed a consolidation and is breaking out of a bullish flag and pattern. So at current levels, I'll be a buyer in Crompton for a target of 385 with a stop loss at 345 on the downside.
All right, so those are the two buy calls coming in from Aditya. But Ruchit, what about you?
So a couple of names that we like. One is the large cap stock, Larsen and Toubro, where post the recent price rise corrective phase, the stock has again started that higher top, higher bottom structure. And what we can observe that whatever corrections have been there recently, there have been more of a time-wise corrections where the stock consolidates in the range for 5 to 6 trading sessions, then again resume its up move. So I think the volumes are also good along with the price up move. So we expect slow and gradual up move to continue in L&T. So traders can buy at current market price with stop below 35.40 for potential near-term targets around 3850. And Hudco is another name which is looking quite positive on charts. Again, one of the stock which has seen a good amount of consolidation over last few days. And this entire consolidation phase, its key moving averages support such as 50-day EMA or 200-day EMA has not been broken. Now the price is on the verge of the breakout. And if you look at today's volumes, then it is quite better than what the average volumes of last few days or last few weeks. So it's on a verge of a breakout along with very good volume. So I think this could show a relative outperformance in the broader markets. So Hudco can be bought with stop below 232 for potential targets around 254.
Interesting. Yeah, Hudco is definitely seeing quite a big move in today's trading session. Mayuresh, where is it that you're finding opportunities within the entire realty-related theme?
I think names like DLF is something that we continue holding, Ayesha, onto our global portfolios. I think the numbers are very encouraging this time round. And obviously, I think we are into the 5th year of the real estate cycle as we speak. So the expectations in terms of how inventory build-up is happening across buckets, whether it's the premium inventory, the mid-premium inventory, is something to be watched out for. Obviously, the sales velocity in terms of pre-launches have come off a tad bit in the recent past. And therefore, I think the markets are taking it in stride in terms of demand-supply dynamics to a certain extent. But DLF has the opportune business segments that they're present in, residential, commercial, as well as the annuity kind of a business, which probably protects them when one side of the business probably goes through some sluggish period. And obviously, expectations are that the collections should remain strong. The kind of launches that they've announced in the previous few quarters, the expectations in terms of collections from these launches should be robust and strong enough as we head into the next few quarters. And the annuity stock commercial business should also be holding up pretty well, both in terms of renewals as well as rentals expected to pick up pace, both in terms of percentage increases as well as the fit outs that probably happen. So DLF is something that we continue holding in our global portfolios. But as I said, I think a few of the housing finance companies as a proxy to the entire sector might actually do well. Stock like PNB Housing, which has garnered enough confidence through its affordable segment that it has forayed into a few quarters back with higher yields and expectations of better underwriting, providing comfort in terms of slippages, not probably going off the book in a significant manner, actually might prop up the book value and expected earnings and return ratios from this. So I think the way we look at it in terms of ratings, ranking, institution holding, as we can cancel it, housing finance companies like PNB might actually do.
All right, so those are the picks that Mayuresh likes within the financial space. But with this, Ruchit, Aditya, as well as Mayuresh, thank you so much for taking the time out and speaking with us. So just a few minutes left for the markets to shut shop. Let's go across to Snehi, who is here to tell us how did the markets flare in today's trading session.
Well, absolutely. Let's take a look at how today's trading session has panned out. Absolutely no Monday blues coming in for D Street today because we are a 0.6% higher. Right now, as we speak, exactly at 25,000, but we have been dilly-dallying around this mark over the course of the day. And it's been a range-bound trade coming in for Nifty, but nonetheless, looks like we might make it to the 25,000 mark. But even if we shut shop below that, it's going to be very close to that mark. Sensex as well in tandem, 0.5% uptick coming in on this index as well. The advanced decline ratio has been very steeply in the favor of the advances today. So all in all, it has been a good day for the market today. And if you take a look at what the India VIX has done, a 4.5% uptick on that front, but not much to worry about. At 18 thereabouts is where we are on the India VIX. Let's take a look at what the broader markets have done in today's trading session. And Nifty mid-cap, Nifty small-cap, mid-cap up 0.6%, slightly better than the benchmark. Small-cap up 0.3%, slightly underperforming the benchmarks, but good support coming in from the broader end of the market as well. Nifty Bank is up 0.3%, slightly underperforming the Nifty as well as Sensex, but nonetheless in the green is where Nifty Bank has ended today's trading session. If you take a look at some winners and losers from the Nifty pack, we have to talk about the top winner from the Nifty pack, which is JSW Steel, because the Supreme Court has announced a status quo on the liquidation of JPSL, so that is going to be in focus on BPSL, pardon me, that's Bhushan Power and Steel. So big positive coming in for JSW Steel, a 2.2% uptick. While we are talking about Nifty's big gainer, let's talk about Nifty's top loser as well, and that's Eternal, erstwhile Zomato. That stock was lower by almost 5% in today's trading session. And this is on the back of brokerage notes estimating the kind of outflow that the stock could see now that the foreign holding has been capped to 49.5%. And that on the back of that negative news flow, Eternal is down about 4.5% as we speak. Other than that, Bajaj Auto, M&M, Hindalco, Trent, Nestle, HCL Tech, ITC, top gainers from the Nifty side, Nifty winning side. On the flip side, you have Kotak Bank, Power Grid, NTPC, Ultratech, Tata Steel, top Nifty losers in today's trading session. But if you take a look at what's happened sectorally today, it was the day of the autos, but surprisingly IT has overtaken autos. Nifty IT up almost 1% in today's trading session, and that has done very well in today's trade, like Coforge, HCL Tech, Tech Mahindra, LTI Mindtree, Wipro. All of these stocks have done well from Nifty IT. Just in second place, you have very close to IT is Auto. Nifty Auto, it's been the day of the autos companies, the likes of M&M, Bajaj Auto, Tata Motors, Hero Moto, Exide. All of these stocks have done very, very well in today's trading session. All the sectors have ended in the green. So you have FMCG, Metal, Energy, Media, Realty, Bank, Pharma and PSU Banks. PSU Banks are your least gainers in today's trade, held lower by PSB, Bank of Baroda, Maharashtra Bank and Union Bank. Another stock to watch out for, KC International and Shilpa Medicare. Both stocks were surging in today's trade ahead of their Q4 numbers. So keep a close eye on both of these stocks as well. But nonetheless, this is how we're ending for the day. We'll give the rate some time to settle. Looks like we're very close to the 25,000 mark on the Nifty. Let's see how tomorrow's trading session turns out for us.